Welcome back. You're watching Your World at 10. This is a conversation I've been wanting to do for a couple of weeks now. We finally have the time. There's less news today. So here's what I want to take you through. Now, on April 1st, after 28 years of its existence, UK's Financial Services Authority, the FSA, died only to be reborn as two, the FCA, or Financial Conduct Authority, and the Prudential Regulation Authority, or the PRA, which will function under the Bank of England. The FSA's regulation of financial market infrastructure, such as settlement systems or clearinghouses, has also been passed on to the Bank of England, that's the central bank in Britain. Now, how will this new dual structure work? And will it succeed where the FSA was deemed to have failed? That is, in preventing another financial crisis. To talk about this, I'm joined by Patrice Muller. He's senior partner at London Economics. Patrice, thank you so much for joining me on this conversation. Let me start by asking you where you stand in the argument that the FSA didn't quite need to be dismantled because its inability to detect the financial crisis of 2008 or 2009 was not a big failure, that very few regulatory institutions could have detected the oncoming of that crisis, that the FSA was fairly efficient in its working previous to the crisis and hence should not have been dismantled and converted into this new two-headed avatar that it has.
Okay, I think one needs to distinguish between the structure and the use of the structure. While the FSA existed prior to the financial crisis, it was a very light touch regulatory regime, which had nothing to do with the fact that the FSA existed. It was just the general environment, the general approach to regulation of financial sector. So you had cases like Northern Rock, where they increased the balance sheet very quickly, which normally would have raised alarm bells, but was considered innovation, new approaches, and was okay. So it was not the structure that we had the FSA, it was more the approach within the FSA, which was also common at Treasury, in Bank of England. It was a very light touch regulation. Now, I think it's fair that nobody could have anticipated the depths of the financial crisis, which is largely caused by the Lehman event. Without Lehman, probably we would not have had such a deep financial crisis. But nevertheless, there were warning signals up there. Will the new structure be more efficient? Well, possibly. The Bank of England has not a stellar record if we go back far in time, like the BCCI events, the Baring events, and so on. So well, the jury is out. One thing which has been clarified, I think it's very useful, is that the FSA had conflicting objectives. They had to promote the city, make sure it's competitive, and so on, and at the same time protect consumers, which sometimes can lead to conflicting situations. Now the situation is clearer. The Bank of England, in essence, deals with risk issue, behavior vis-à-vis risk, and the FSA protects consumers and makes sure that the market works well. So from that perspective, it's clearer. Now, obviously, when a financial institution runs into problems, we still have to see how they will work together. Before, the view was the tripartite arrangement between Treasury, the Bank of England, and the FSA did not work very well. Well, we still have a tripartite arrangement, except that one part has been moved to the Bank of England now, so we have to see.
And the FSA, or at least part of the FSA, is now called FCA. In fact, that is the second question that I wanted to ask you. From what I understand of the new structure, prudential supervision of banks, building societies, insurers, Lloyds, and even certain systemically important firms will be done by the PRA, that's the Prudential Regulatory Authority, whereas the FCA, which is the Financial Conduct Authority, will regulate the conduct of these very same firms that I've listed, as well as the conduct of other non-PRA regulated firms. Do you think there could be cases of tremendous overlap? Because there is a common set of firms that both these agencies will be regulating, or maybe even tremendous gaps because there is a single set of firms that only the FCA will be regulating. What do you expect will be the outcome of having two regulators look at this?
Okay, well, there is certainly scope for overlap and duplication. However, they already have signed or are considering a memorandum on how they will work along, I mean, the PRA and the FCA, so to avoid first imposing additional costs on businesses and making sure that nobody falls in between the cracks. So you're totally right. The deposit-taking institutions, from a risk perspective, are all going to be regulated, and they have to be registered there by the Bank of England Prudential Regulatory Authority. The conduct of these enterprises vis-à-vis customers will be addressed by the successor of the FSA, the Financial Conduct Authority. So there is potential, but I don't think the way the two parties are working together now that there will be a lot of cracks in between. The real issue will be when there will be, let's say, another financial institution running into troubles, and there may be conflicting objectives from the two institutions. They may have different objectives, different projections in mind. The Bank of England will be preoccupied by making sure there is no systemic risk, while the FSA will, the FCA will be more preoccupied by making sure customers are okay. So it will be interesting to see how it all works out.
Patrice, what happens then to other market players, for instance brokerages or investment banks? Will those be regulated by the FCA in terms of conduct, and does the PRA have any role at all in regulating investment banks?
The FCA, well, if they have no real interface with customers, less so. Investment managers will be. The exchanges are regulated by the FCA, so a lot of intermediaries, financial sector intermediaries, even if they are non-banks and they are not systemically important, will be under the FCA. So they will be regulated, yes.
No, sorry, maybe I wasn't clear enough. What happens to investment banks? Because that was a key area of weakness in the US as well. Will investment banks be regulated by the PRA as well, or just only the FCA?
You know, here in the UK, most of the investment banks, the pure investment banks, have very little interface with customers and users like you and me. So they will be mostly regulated by the PRA, but if they are selling products or to customers, they will also fall under the FCA. So just being an investment bank does not necessarily get you out of the box that you are regulated by two entities now. But the primary regulator will be the PRA.
All right, so you listed Northern Rock, there was HBOS, even RBS needed a bailout. Do you think this new structure, two-headed structure if I may call it that, will be successful where the FSA is deemed to have failed, that is in being able to prevent the next financial crisis, if that's possible?
Yes, I think it will do, but I don't think you needed to break up the FSA to achieve that objective. I think the world has changed. People are much more preoccupied in general now with risk-taking of financial intermediaries and what that means for systemic risk. So it was not necessary to achieve that greater focus by breaking up the two entities. The other point I think is important to stress is while there were collapses here in the UK, like Northern Rock and so on, these were small on a worldwide scale. They created a bank run here in the UK, but it was limited, and with hindsight probably the bank run could have been avoided if liquidity had been provided more quickly. The big impact on the bigger bank like HBOS and so on, that is really the fallout of the worldwide financial crisis, which to a large extent was amplified by the Lehman event.
But Patrice, you'd admit that nonetheless it was also the failure of UK regulators in being able to deal with these situations and as quickly a time as possible that contributed to the worsening of the global financial crisis.
Yes, but I think that goes back to the argument I made at the beginning. The environment is totally different. Prior to the financial crisis, it was a very much light touch regulatory regime, and regulators first were not that much concerned with risk, or less than they are now at this time, and it would also be very difficult for regulators to take a very hard stance when the city was booming, the government was encouraging growth in the financial sector. It was just going against the grain, and now the world is totally different. So I think at least for the next few years regulators will be really focusing on risk. Whether the lesson has been learned 10 years down the road? No, I don't think so, because financial crisis come and go.
All right, 10 years is a far away time. How would you contrast what the UK has done to reform its regulatory environment in response to the chinks in the armor that were thrown up by the global financial crisis with what the US has done? So we've seen big legislative changes in the US, the Dodd-Frank Act. We've seen the creation of many more regulatory authorities, new powers being given to the old ones, including powers such as the breaking up of big banks. So do you think the UK has kept pace with the kind of many changes that the US has undertaken, but in a simpler, leaner fashion, or do you think that the two countries have worked in a very different or divergent way?
No, fundamentally I don't think they are different, but there are 2 points to note. The US has really a whole slew of agencies and bodies intervening in, and it's very confusing, and there is competition between the various authorities. At least in the UK there are only two preoccupied with regulation of financial intermediaries. The other important point to note is that the UK cannot act alone. We are within the European Union, and a good chunk of the regulatory approach, of the rules and so on, are pre-specified by law which is adopted at the European Union level through directives like MiFID, or the second MiFID regulation directive which is coming now, the capital adequacy regulation number 4, and so on. All this is coming from Brussels. So the UK cannot just go along and decide to regulate in a totally different way. And I think where the tension is now, one can see that, is on the various proposals on how to separate the banking system into something which is called the safe banking, or the traditional boring utility type banking, and the banking part which takes more risk. And there are various proposals. In the US you have the Volcker proposal, at the EU level you have the Liikanen proposal, in the UK you have the Vickers proposal, and the UK and the EU proposal are not strictly identical, so there are a lot of negotiations still taking place on what is feasible and what can be done. But the important point is the UK operates within the EU, and so is constrained by the EU legislation, or the legislation which has to be adopted as a result of EU directives.
All right, so keeping that limitation in mind, and keeping in mind some of the concerns or apprehensions that you've already expressed in this conversation, let me ask you a final question. Will the FCA and the PRA combined succeed where the FSA was deemed to have failed, or will even two regulatory approaches fall short?
No, I think it's a good step in the right direction, but what is also important is the people you put in. It's not only the structure, but do you have heads of institutions which are very forceful and are really concerned and are taking the mandate very seriously, or are we going back to a light touch system? And at the present time, the people who have been appointed clearly are not light touch. They want to make sure that the financial sector operates correctly without creating a risk to the economy. That's from the Bank of England side. And on the other side, one thing which one has to remember, and maybe it's not appreciated enough outside of the UK, is that some financial intermediaries have engaged in activities which were detrimental to consumer. There is enormous mis-selling of PPI and other products, and I think the Financial Conduct Authority will take a much tougher stance on that, and they have the power now to prevent the sale of a product which they think is not appropriate, which the FSA did not have. So both from the prudential side and from the consumer protection side, I think we are moving into the right direction. Now, we didn't have to split up the FSA to achieve that. That was a political decision, but at least the new system is going the right way.
All right, Patrice, thank you so much. The PPA, as you mentioned, is an insurance product, if I think I've read it correctly. But thanks very much for joining us with your point of view on this new avatar of the FSA. Patrice Muller there, taking you through what he thinks of the FSA breaking up into the FCA and the PRA. With that, I'm wrapping up this edition of Your World at 10. Stay tuned. Up next is Markets Today.